Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. This is the weekend market review for June 2nd and 3rd, 2018. Taking a look at the week that was, is, and will be. We take a look at charts from weekly perspectives to give us a better sense of what's taking place in the markets today and what likely will take place going forward. Let's take a look at the 10-year U.S. Treasury. On the daily chart, we got the expected bounce that we were expecting to see here. The question is what happens once we hit this 50 RSI level, which will be very strong and formidable resistance, coincides with the 50-day moving average here just below the middle Bollinger Band. We might have a little bit more upside in the short run, but I think we'll be seeing more downside in the short run before we see more upside in the markets. Now, this was a very beautiful hammer pattern on the weekly chart. We bounced very strongly off of that 26, I would say 27 zone. But unless we can recapture that very, very soon, and it's possible that we may, I think we're ultimately going to be headed lower towards that 250 range, very likely on the 10-year Treasury. We're still consolidating on the monthly chart here, right above the 60. That's what you want to see. But between 225 and 30, this is very strong consolidation before we're likely headed towards a break to a move about 340 here on the 10-year Treasury. Now on the gold daily chart, gold had a nice bounce from a low of 1281 to a high of 1311. We found resistance at the 50 RSI level, no surprise, but we're seeing some positive divergence. Same RSI as at 1311 as when we were at 1326. Right now, the 50-day moving average is serving as overhead resistance, and we even closed the week below the 200-day moving average. But I'm fairly confident that this move here is going to resume to the upside. There are multiple signs that are suggesting that, one of which is that the miners are outperforming the metal, the juniors are outperforming the majors, and there are just multiple signs of technical positive divergence that we're seeing. So this particular shakeout, in my opinion, is a short-lived one. On the weekly chart, we're below the 50, so until we break above that from a longer-term perspective, we're still in kind of this corrective phase. But going even further back on a monthly chart, I've been pointing this out for a long time, we have broken out of this 5-year downtrend since 2011. These breakouts sometimes take months, if not, I don't want to say years, but certainly months to break out of, and now we're retesting that 50 area of RSI breakout. It's important that we hold, but we're still above the 50 and the 50-month moving average of 1274. So long as we close above that level, I think that this breakout is still very much in full force. Now, high yield junk daily. Still see signs that this wants to move higher on the daily. I've seen many folks post that we might be breaking down, and I remain open to that possibility. But from the daily, we're making higher highs on RSI here. It looks like we want to break above that 50 RSI level sooner rather than later. On the weekly chart, we're right below the 50. And we're consolidating. We're in this very, very tight triangular pattern here. It can go either way, and it's going to be interesting to see which way it breaks. Looking at the PPO, it's curling up, and I think that the probability is increasing that the break will be indeed higher. But I remain open to any possibility here. On the monthly, we're consolidating through time. We're not really going down in price. We're still above the monthly middle Bollinger Band, and so long as it's above that level, it still remains in positive territory. Looking at oil, crude oil daily, it had a little bounce here a couple days ago, but I think it still wants to move lower to at a minimum 62, possibly as low as 58 here to shake out some of these longs. We've been very frothy in this market, and I've been one of the few bulls when we were at the 45 level, but now it needs to pull back some, consolidate before moving higher. On the weekly, that 50 RSI level will serve as very strong support, but it might not hit there until we hit that 55 level or around the 58 level, which coincides with that 50 and 200 EMA around 59.60. So some more downside in the oil sector, in my opinion. On the monthly chart, we closed the month below, or rather, basically the month below that 60 one level, and that's important to maintain. But so long as we close the month above the 50-month and the 200-month moving averages of 60 and 62 respectively, I think that this oil bull market is very much in full force. NASDAQ looks very, very strong. It's breaking out to new highs here on the daily, and momentum is leading price, and that's very positive to see. I think NASDAQ is going to break out to all-time highs very, very soon. NASDAQ weekly, here again we broke out of this RSI downtrend. We're now on the weekly close above 61 level, and with PPO set to break above 0 level here, I think this is a very good sign for the markets in general. NASDAQ monthly, we've been pointing this out, so long as we're above the 70 level, very strong and bullish territory. So long as we're above that 70 area, we're going to see higher highs consistently until it breaks below that with vengeance. Russell 2000 breaking out to new highs. You want to see the small caps beating the large caps, and that's what you're seeing here. Very good price action in the small caps. On the weekly, we have a slight divergence here where price is at all-time highs, but momentum hasn't yet followed suit. Let's see what happens here. I think with PPO breaking above 0 here, we have quite a bit of momentum to continue this ride. We break above 70 here on RSI, and this can really run very quickly. Russell monthly is breaking out to new highs, and that suggests that this move is legitimate, and a lot of upside is still in store for small caps. S&P daily, S&P has been struggling for a little bit here. It's been consolidating basically since middle of February. Can it break out above the 2750 level? I think the signs are suggesting that it will do so very soon. It's been held back by the oil sector, but so far it's holding strong, and on the weekly it looks like it's setting up for a move higher here as well. Look at PPO, very, very close to a very strong move, in my opinion, to the upside. A couple more charts here. S&P monthly, where we recapture that 70 level on RSI. That's very positive development. Let's see what happens. Can it maintain it here for a couple months, or will it break back below it? US dollar daily has been very bullish. We broke below the 69.70 level. Want to move back up higher. Let's see if it can recapture that level, or this bounce is one for the history books. Now, looking on the weekly, this is the level that I pointed out would meet very strong resistance. This is the level we broke down around that 104 level. RSI right around that 68, 69 level. You draw a line here. This is around that level that we're going to face very, very stiff resistance. We're right about there right now. Might go a little bit higher, but ultimately I think this move ends very soon. The question is, will it find support around 92, or will it break lower? Time will tell. US dollar monthly closed above the 50 level. That's very positive development here. PPO is moving upward. That's very positive. Let's see what happens here. I remain open to the possibility that the dollar has indeed bottomed and will be moving higher. However, there are plenty of signs to be still skeptical of this rally. It needs to break above this 97.50 level to really confirm upside on a technical level. The VIX daily, it's very interesting. On the one hand, it's kind of retesting this breakout zone. On the other hand, RSI is not looking so strong, so very likely that this move doesn't end well for the VIX. But you're looking at it from a weekly standpoint, I'm seeing a lot of signs that maybe that this does break out above the 50 RSI level, and if it does, this triangular pennant pattern will break higher, and the markets will experience some pretty nasty volatility and sell-off. So stay tuned. I see mixed signs. I'm not quite sure which way the market goes. It'll be interesting to watch. On the monthly right now, we're closed below the 50 level, so it's very possible that the markets do move higher and volatility continues to correct lower. Finally, the weekly World ex-US index. It's been very weak. of late, and while we closed above the 50-week moving average, I think that with its dollar strength, this is finding some trouble here. So let's see what happens. Ultimately, if the markets have any weakness, this one's going to be really the victim of that weakness more so than any other major sector. And finally, the monthly chart. I think ultimately we're going to retest that 50 level at some point in the future, and so possibly a move lower towards that 50-month moving average of 1842 is still in the cards. So it's going to be interesting because on the one hand you've got the U.S. markets doing well and showing resilience. Global markets aren't doing as well this time around. So which one wins out? Are they both going to move in the same direction? Are they going to decouple from one another? Time will tell. Anyway, guys, good luck with trading. Have a great week, and we'll see you guys soon. Take care.